In this video, I'm going to give a few tips and tricks for the people who have trouble passing their evaluation accounts. A lot of people will fail their evaluation accounts because they take inspiration from people who are trading personal accounts. You trade personal accounts very differently than you trade prop firm accounts, at least if you want to pass them. You see, prop firm accounts come with a set of rules, and these rules are meant to make you fail. And so it's very important that you understand these rules and do everything necessary to bypass them as best as possible. So the first thing I want to talk about is larger stop losses, okay? I see a lot of people who will trade with a stop loss that is this tight. Again, yes, that would have worked in this trade scenario that I'm in right now, but I would never go for such a high risk to reward trade with such a tight stop loss when I'm trading with a prop firm account. That is exactly why I put my stop loss all the way down here. This also goes for people who are trading a personal account. Overall, I see way too many people who are using a way too tight stop loss, okay? You are not going to time the market that accurately every single time. You have to allow the market to do what it needs to do, and you do that by having a larger stop loss, okay? If you are entering off of a zone, whether that be a supply and demand zone, an order block, or a fair value gap, there is a high chance that price is going to dig deep into that before eventually proving you right. And a lot of people will get stopped out on a trade that they got the direction right on simply because they want their trade to look fancy. High risk to reward systems does not fit into the prop firm criteria because of the rules, especially if you're trading with a futures prop firm, okay? They have what they call trailing drawdown, and what it basically means is every single time you make profit, your stop loss decreases by the profit you made. So if you, for example, bought a 50K account that had a max stop out at $2,000, meaning you can lose a maximum of $2,000 and you blow the evaluation account, that means that the max drawdown of a 50K account is $48,000. If you hit that, the account is blown. If you then manage to make a $1,000 profit, so your account balance is $51,000, now your stop loss is decreased to $49 instead of $48. And so the easiest way to bypass that is simply to win more, okay? Yeah, that sounds crazy, right? But you can, absolutely. The easiest way to make sure that you gain a higher win rate is to go for lower risk to reward positions. This is the number one mistake that I see people make, especially in the futures industry. They go for 1 to 10s, 1 to 5s, and that's simply not the way to go about it when you have a trailing drawdown, okay? You have to have the highest win rate possible, and that means larger stop losses and lower risk to reward. So the general advice that I have when it comes to risk to reward is anywhere between a 1 to 1 and a 1 to 2. And what I mean by that is, for example, if you longed this imbalance that we see right here on my screen, and you longed the very beginning of that, and you place your stop loss in the middle of the imbalance, you would have been stopped out, but you would have been absolutely correct in terms of the direction. And so to avoid that as much as possible, you want to place your stop loss in an area where if the market goes here, you are proved wrong. So that is exactly why I put my stop loss on this trade. We are now at break even, but originally I put my stop right here because again, when I catch such a perfect entry like I did right here, that is pure luck, okay? That is not in my control whatsoever. The market could have easily come down here, consolidated a bit, and then proved me right. And that is exactly why I want a stop loss in a place where if it goes there, my idea is completely invalidated. And for me, during this position, that was all the way down here. If we started to break through these lows, well, then I would start to think that now we are not very bullish anymore. We are now starting to be bearish. And that is exactly what I want to do with my stop loss. I see a lot of people placing stop losses with no intention. They place it simply to increase their risk to reward. Their stop losses does not make any sense, okay? Before you get into a position, you have to have a reason to take it off when it hits your take profit, and you have to have a reason to take it off when it hits your stop loss. Nothing should be placed randomly. Your take profit is there for a reason, and your stop loss is there for a reason. So I see a lot of people will target certain liquidity for their take profit, which means they have an actual reason for their take profit, but then their stop loss is sort of just random. And I believe that is a downfall for a lot of people. It's people who've been brainwashed by social media to believe that if your trade doesn't have a very tight stop loss, well, then it is simply not a good trade. That is the furthest from the truth. in the banks, they don't even use stop losses. Now, I do not recommend that at all because, again, they have a lot more leverage. They can be in drawdown for larger periods of time. They can go deep drawdown because, again, they are not trading with prop firms. But the idea is they know that they can be absolutely right about the direction, but it can still go against them for a little while before eventually proving them right. And so, for example, if we take a look right here, we have equilibrium right here. I drew the Fibonacci extension tool from the low here to the high. And let's say I wanted to enter off of this imbalance right here, and I wanted to target the all-time highs, which is right here. What I would see a lot of people do is enter off of the imbalance and then place their stop right underneath the imbalance and then target the all-time high. This right here is a 7.79 hour position, and that is super unrealistic. Yes, you can absolutely have a system that works when you're trading 7.7 hour systems, but again, that is not the way to approach prop firms. So even though this trade will look great on your Instagram story or on your Twitter post, this is simply the worst way to approach a funded account. Trading is not supposed to look fancy, okay? It really is not. And so let's take a look at what happened if this was my actual trade idea. Again, I have the imbalance included. I have the equilibrium of the trading range included. Let's see. And look at me being absolutely correct about the directional bias, but I got stopped out because I wanted a flashy trade. So what I could have done is place my stop loss way closer to the low and maybe go for a 1 to 2 risk to reward. Obviously, this does not look as great, and yes, you may not earn as much money, but I guarantee you, you will win a lot more than if you are trying to make your trades look fancy by having a tight stop loss. There's no beating around it. The markets are random. You have to allow the market to do what markets do. You can simply not be that accurate all the time, which is why you need to have a larger stop loss. Even a stop loss at the low would be a 1 to 3 RR trade, and that would be absolutely acceptable for anyone trading a prop firm account. So even though a trade like this looks absolutely crazy on social media, the only reason why it does that is because of the stigma that people created on social media. It's very easy to make people think that you need to have 7.7 hour trades every single day in order to succeed, when that really could not be further from the truth. So please listen to me. I guarantee you, if you start simply going for larger stop losses, allowing the market to go against you for a little bit, going for lower risk to reward systems, you will start to see an immediate change in your prop firm progression. It might hurt the ego a little bit, and people may tell you that, that's not a good trade. Do not listen to those people. There are plenty of people who are trading lower risk to reward systems who are doing extremely well. In fact, I would say there are more people who are trading lower risk to reward systems who are successful rather than high risk to reward systems, and also on personal accounts. So it's not only prop firm accounts, but specifically prop firm accounts. This is so important because you want to maintain as high of a win rate as possible. Again, this is coming from someone who have failed tens and tens of evaluation accounts before I ever passed my first one. And this was the major change where I really noticed a difference, okay? As soon as I put my ego to the side and I understood how markets work and I understood exactly why the majority of people are failing with prop firms, I started to become comfortable going for lower risk to reward plays and trading with large stop losses. Another thing that you can do to maintain a high win rate, if you want to go for a little bit higher risk to reward positions, maybe you want to go for, a 1 to 3 or whatever it might be. Let's say I wanted to go for a 1 to 3 on this position. What I can do is take the majority of my position off at a 1 to 1, which would be right here, and then let the rest run to my original take profit, which is the all-time high that we have up here. What this is going to do is give me a high win rate. Let's say I take 80% of my position off at a 1 to 1, and I let the rest of the 20% run to my original take profit. I am maintaining a high win rate, but I can also have those large runners that will eventually turn into bigger and bigger wins. But I do maintain good risk management, and I do maintain a high win rate, while at the same time I am able to catch larger trades or larger RR trades. So there's a bunch of different ways you can go about it, but the most important part is put your ego to the side. Understand that markets are not that precise. You simply can't time it that well. Prop firms want you to lose, and so the easiest way to bypass that is to have as high of a win rate as possible. And obviously, the easiest way to gain a high win rate is to trade a lower risk to reward system. That is simply how how it works. So do with that information as you will. This right here is exactly what changed it all for me, and that is what allowed me to pass my first ever prop firm account, and I still approach my funded accounts with this exact mentality. So thank you so much for watching. These were just a few tips for the people out there who are struggling. Again, do not give up. Things are going to take a while.